Good evening, everyone. Good evening. Hope everyone had a great day. And for traders, I think was a very blood red day today. But yes, we can also make money from such kind of market, right? But we have to analyze accordingly. So that was a great day today for sure. Like in case if you have taken any intraday, then it's a perfect day for making good money. Okay, so it's all in the game, and we should know like how to make the moves. That is like whether to go for a buy, whether to go for a sell, what kind of segment I have to choose today, whether it is good for intraday. All these things, it's in our hand because we are going to make our trade. No one is going to do for us. So obviously, you should know everything. Understanding the market sentiment and then preferring the segment is the most important thing an independent trader requires. Okay, so let's learn more about it. No problem. Okay, so today's topic, as you know, we are just going to continue with the basics of stock market. Just three topics left out. That's it. And I'll move to the Nifty, all about Nifty and its and P ratio. Okay, so today's topic is going to be an important one for both traders as well as investors. Okay, first off is going to be for traders and second off for investors. Okay, so any issue with my audio or video? Am I audible? And is it clear? Let's confirm that and we will move. It's clear. Okay, done. Thanks for the confirmations. Okay, thank you. So we will get into the topic. And before that, let me complete. Okay, just give me a moment. Disclaimer. Stock Phoenix is not a SEBI registered entity and its representatives are not a SEBI registered advisor or analyst. The session conducted as part of mentorship program is purely for education and learning purpose only. This should not be considered as any sort of recommendation or advice. All the views expressed are personal. Stock Phoenix and its representatives does not bear any liability. Okay, let's quickly. Okay, so this is the topic where we left out yesterday. So I'll just complete with the three topics of basics of market, and then I will enter the Nifty and its P ratio. Fine. So exposure and margin funding. I think yesterday itself I gave a hint on this exposure. That is leverage. I am having an amount 10,000 I have in my account now. But I found that perfect technicals worked in Ashok Leyland, but it is asking me to give 20,000 as capital. I have only 10,000. What can I do now? So this is where leverage comes into picture. I'm very sure about the technicals and I'm very sure that the stock is going to give me a good returns, beautiful returns. So I'm taking an exposure. So always remember getting any loan, like kind of loan or getting debt from someone, like we should be very sure that I can repay it. I should be clear. I should have a source to repay it. If I am not in that situation, I should think of taking any loan because again, that will be a big headache for us. Right? So we should not regret in future. Why did I take loan? Why should I have traveled with the money which I got? So this should never happen. So if you are very strong with the technicals, and yes, if you are ready for it, then you can take exposure. No, nothing wrong in taking exposures or leverages, but it should be in a right way and also minimum amount. Always two emotions we have to control. One is fear and the other one is greed. If you can control these two, you are a pro. So, but actually it's not that easy. So like we have to, right? We have to practice to remove those emotions. So exposure is something like that. Greed. We should remove the greed, taking an exposure. How much we want, we have to take that much only because that is a virtual amount. That is not our amount. Anyways, the loss of profit, we are going to bear, not the broker. Okay. So in case, for an example, see, if you are taking, for an example, you are taking a loan, an exposure. For an example, if you are buying a stock with 10,000 capital. Okay. And you're getting an exposure 4 times. 4 times like that you can take. So 40,000 total you have now. Okay. That means you took some exposure from the broker and you have 40,000 as your capital now. Okay. With this 40,000, I made something around 5,000 profit. 5,000 profit I made. Good. So now my 10,000 capital became 15,000. So after this position gets over, that for whatever credit amount the broker gave, it will be vanished. So how much amount I have invested? 10,000 minus brokerage, maybe 100 rupees or something, plus 5,000. So anyways, around 14,000 something I'll be having in my account. 14,900 something I'll be having in my account. This is a positive note. In case I have taken capital of 40,000, see 10,000 risk of 1% is 1,000. No, sorry, not even that much, 100, right? In case if I am going with 40,000, obviously my risk and reward increases, right? It increases. In that case, taking a trade with high capital, we are taking a risk also on a higher note. Okay, if that is my money, 40,000 is my money, no problem for me. If 40,000 is my money, no problem. Okay, I can bear the risk or whatever I'm getting, like maybe 1,000 rupees. You are telling 1,000 rupees I want to bear. Okay, no problem, I can bear. But that 40,000 is not my money. In that 10,000 is only mine. So if I am keeping a risk of 1,000 rupees, it is directly affecting my capital where I am keeping 10% risk, which is not at all recommended. Right. So that is how we need to plan. When I am extending my capital, my risk also increases along with my reward. We should not only think about reward, we should also have an eye on a risk percentage also. So in case this risk I am losing or out of my control, I made a loss of 2,000 rupees. For 40,000, 2,000 is not a big deal. I can recover. If 40,000 is my capital, 2,000 is not a big deal. I can recover, no problem. But 10,000 is my capital where I lost 2,000 rupees. So already 8,000. No, I'll not get 8,000. Maybe 7,900 will be my capital now. So thinking of something in a higher way, bigger way, I lost my capital like somewhat. And that I cannot recover so easily because 10,000, 2,000 loss is a big deal. 20% loss, which I cannot bear. So this is what exposure disadvantage. In case if you can make profit, very good, because 40,000, 5,000 profit is not a big deal. Okay, I can earn it. But from 10,000, 50% profit I have earned, which is a big deal. So on a positive side, exposure is a very good source, like where we can make money. But on a negative side, I'm going to lose my capital like anything because risk is also increasing. Okay. So this is what an advantage and disadvantage of exposure, taking exposure. So on a summary note, take exposure, no problem. But if you're pretty sure that the technical is going to work, okay, no, doesn't matter because like sometimes unexpected things will happen. So I cannot confirmly tell that the stock is going to rock. Anyways, if it is falling also, my risk will be there, I can bear. But when I can bear the risk, when I am not taking that much capital as my exposure, that is 5 times, 6 times, 7 times. Okay, so this much exposure I should not take. Maybe if you want 2 times, 3 times, 4 times max. Okay, above this, please don't expect from the broker. Maybe they are ready to give, but you have to bear your loss or profit. Okay, profit is not a matter, but loss. Okay, so this is what an exposure. You can take it, but think twice before taking exposure or leverage. Okay, so let's learn about it. Brokers give virtual credit limit for trading in intraday, which is called exposure or leverage. For example, if you have 10,000 in your trading account, broker will allow you to take position up to 1 lakh for intraday trading. They are ready to give because it's a virtual credit, but we cannot bear. Exposures can be taken up to 4 times. So you learned money management. So 4 times up to that exposure we can take in the live market of intraday trading. Max 4%, 4 times, that too as you become an independent trader. That is, after your practice of at least 2-3 months, you can try with exposure. For example, if you have 10,000, you can take positions up to 40,000 and manage with proper risk and reward, because as your capital increases, risk and reward ratio increases. Margin funding. Okay. The same way, another one is margin funding, but this is like directly taking a loan. Okay. It's a very big deal, which is like importantly given for investments. Okay. Exposure is for trading and margin funding is for investments. Brokers give loan up to 100% of your capital. 100%. Remember that. Actual capital to take delivery for qualified stocks for short-term trades. Short-term means like at least for an investment of maybe like 6 months or 1 year, like that. Okay, so if you want, you can take for qualified stocks, that too for few stocks only, like it is available. They are providing the loan up to 100% only for few stocks. For this, brokers charge interest up to 18%. For an example, 1 lakh rupee is my actual capital, okay? And I'm getting 1 lakh rupee from the broker because 100% loan they are ready to give. So 1 lakh plus 1 lakh, 2 lakhs I have in my hand now. So in that, if you see 18%, right? 18% per annum is going on interest, which is 18,000, right? 18,000 for 1 lakh rupee. So already you're going to pay 18,000 on your 1 lakh capital. Though you have 2 lakhs now, it is not your actual capital. This is your actual capital. So anyways, 18,000 is out from your box because you have to pay interest. And in that, 2 lakhs, that is, you have taken the trade and 1 year you have kept your position on, you have only made 20,000 profit. If this is the case, what is going to happen? 18,000 you are going to give as your interest, 2,000 profit only you are going to get from it. Because 20,000, 20 minus 18, 2,000 only left. So your capital now becomes 1,02,000. Are you like feeling it right to hold your position for 1 year, taking 2,000 rupees profit? No, right? If it is really good, the stock is really good and it is really going to blast like anything, you're getting 50,000, 70,000 profit, 1 lakh, 100% returns you're getting. In this case, it is okay, absolutely fine. In case the stock is falling like anything, I took a wrong stock and already I am in a loss of maybe 10,000 loss you have made. Remember, 18,000 you have to give. In addition to it, 10,000 loss you have to bear. So 28,000 directly out of your capital, right? So that's the reason margin funding is also something we have to utilize properly. So if you are planning to take this, no problem. You have to verify the stock perfectly, analyze it, and then go for the trading accordingly. In other words, trading with your own money is always a safe trade. Okay, trading with like loan or debt or something like that. Additionally, you are adding pressure on your mind. Additionally, you are adding it. So obviously, your technicals will not work. Only your emotions will work. Okay, so maximum don't prefer taking any exposures or loans. Better trade with whatever capital you have in hand. Obviously, you are going to extend it. You are going to make good money in the future, but you need to hold your patience. That's it. So margin funding should be utilized properly. If the stock is in loss, the trader has to bear the interest and also the loss together. Okay, so these two, it's totally fine if you are taking, but think twice and use it properly. Okay, so fine. These things I think you have already known. I don't want to like repeat it once again. What is a long? What is a short? Long means, you know, right? Buying. When I'm expecting the stock will go up. So that is what a long. And short means when I'm expecting the stock is falling down. So profit and loss, I told you, right? From the entry point, if it is coming down 1 rupee below the entry price also, you will start incurring losses in long. And 1 rupee above your entry price also, if the stock goes, you will start incurring losses in short. So this is what short and long. And short selling on positional like delivery is not possible in cash. That is cash short intraday only possible, not cash positional. Sorry, short positional. But in derivatives, it's generally possible. Okay, shorts are allowed to carry over till the expiry. I told you, right? Expiry is there. Selling a stock at 95, buying at 93, profit of 2 rupees, because I'm expecting the stock should fall down. Selling a stock at 95 and buying at 103. Every 1 rupee above your entry price will fetch you loss. So we'll give loss of 8 rupees. So this is how we need to calculate profit and loss. Shorts in cash market should be covered at any cost in the same day, or else the trade will get into auction and lead to further complications, obviously penalty. Okay, so this is simply long and short. I think you know at least these basics. So let me get into the next part. Finally, basics of stock market, last topic, pre-market. I will tell you one thing, for every carry forwarding traders, for every okay, I think Mr. Anshul Gupta is facing issue. Mr. Anshul, join the webinar. Okay, so in case if you are not receiving the mail, please use the previous day mail and you can join it. Okay. Okay, so pre-market, it's very, very helpful for every trader, because if you are already holding a position also in Nifty, if you are holding a position also, you are just going to check, okay, what's happening in the pre-market. Accordingly, I'll cancel all my calls at that time, all my meetings at that time. I will sit in the pre-market. I will try to do I'll try to plan what I have to do for the day. And not only for the whole, like carry forwarding traders, also for intraday traders, pre-market is a boon, because you will come to know how to start your day. Okay, you will be planning. Yesterday itself, I am planning all the stocks ready. For 3 stocks for buy, 3 stocks for sell. So today in the pre-market, getting to know what is market today. Accordingly, I will refilter. And from 3 stocks, it will not be a big deal to take any trade for intraday. Or else on Nifty also, if you are planning to take your trade, you will plan like what to do in the market for intraday. Okay, so that much pre-market is very beneficial. And okay, so 9 a.m. to 8 a.m. actually. By watching the pre-market, we can be prepared to adjust our trades if required. You can close your positions in profits or in stop loss as per the trading plan. Equity trades can be adjusted. Equity trades can be modified during pre-market. You will get 8 minutes actually, time to plan your execution till 9:15 till the market opens. So you will have you will be prepared with what is the plan for today. This is very much helpful for all types of trader. Okay, I'm done with the basics of stock market. So we can proceed with the Nifty PE ratio. Okay. So this is very, very helpful, as I told you, very important for every trader, as well as all about Nifty for traders, PE analysis for investors. Okay, so we are going to discuss it, and in case of any query, you can directly question me here. We can discuss about it, like maybe closing one topic also we can discuss, or in between if you have to clear anything, let me know, we can discuss accordingly. Okay, is he still having issue? Okay, let me check with him. Just give me a minute and we'll make sure he's like getting it done. Okay, the tech support will take care. Fine. So let's not waste time. Maximum we will be joining now, I think. All about Nifty. So let's enter into it. I have already given this. Okay, Indian markets again. I'm not going to take it again. I'm just taking it because I told you yesterday. NSE, BSE. This is what the main thing, as I told you, like National Stock Exchange, basically stock exchange. Without that, we cannot trade. We cannot see the stocks listed in the market without stock exchange. But we are not supposed to deal with the stock exchanges directly. For that, we have some middle person called stock brokers. That is our Upstock, Zerodha. All these things we discussed yesterday. And generally, stock exchanges have something called market. That is like What is happening in the market? Market is totally red today. It was bleeding heavily. Market is beautifully green today, grassy green. So these things are not how we are telling. What is market? Market is nothing but index. Indices tradings. You might have heard this. So there are many indices available. Generally, the known indexes Nifty and Bank Nifty. Okay, and it is like the combinations of many stocks in it. It constituents like 50 stocks, or if you are taking Nifty Pharma, medical like pharmacy kind of stuff, like under that the stocks coming under that pharma sector will be listed in the index. So an index will indicate you what averagely happens with that stocks, 50 stocks if it is there, mostly which stock is performing on the highest level. That is, for an example, I will ask you a simple question. Okay, market, one side, if you see, some three stocks are there which is giving almost 8% positive. Okay, and seven stocks are there giving 2% negative. Tell me in a very simple way. If it is wrong, also doesn't matter. Tell me what is going to be reflected by our market. What our market is going to indicate, positive or negative. Give me one answer. Positive market or negative market? Just a logical question. If you know, no problem, you can answer or give a try. I will not pinpoint your name and I'll tell why you have given negative or positive there. I'll not ask you like that. Don't worry. Okay, so most of the answers I got, not even one single like wrong answer I got. Everyone gave positive. It is right. This is what actually market. So majority of the stock, how they are performing will be reflected by our market, which is called index. Okay, so index is the main thing we are looking like on an average, like what is happening in most of the stocks. Okay, so green signal or red signal provided by our index, accordingly we are going to plan our trades. Okay, so this is what generally index. We are going to learn something in detail about it. Okay, and how to trade with index and how to analyze it going further, somewhat with our SP setup and all, you will come to know. We can discuss more in our clarification sessions also. So National Stock Exchange, very, very important part. And remember that we are going to discuss NSE on the most. BSE will not be touching. As I told you, if anyone is trading with BSE also, don't quit. You can continue, doesn't matter. But we are going to majorly focus on NSE. Stock exchange is a place where all the tradable securities like shares, bonds, derivatives, commodities are listed. NSE established in 1992 and started, this we got to know yesterday. It's India's youngest stock exchange. NSE, India's youngest stock exchange. BSE, the oldest one. It is owned and managed by India Index Service and Products Limited, IISL. This is also for your knowledge purpose. NSE was born in Digital India and its first exchange to offer electronic trading in India, which we have currently. 1920 stocks. Actually, let's see what is the exact count now. So where you can find the list means go to NSE. See, we are getting everything from NSE. So go there, market data. In the NSE website, you can see something called market data. Come to it. You can see securities available for trading. Click on securities available for trading, where you will find securities available for equity segment. Okay, so click on it. You will get your file downloaded. Go to it. You will find all the stocks whichever is available to trade in equity market. Okay, and yesterday we got to know how to filter the stocks for F&O, and today this is basically for equity trading overall. So how many stocks? 1963. Leave that title. So 1962 stocks approx we have, right, overall to trade with. So this is one way where you can filter the data. Okay. Okay. And yeah. So NSE has become the largest exchange in India. See, this is what I told you, right? Now the volume is huge on NSE than BSE because it is like worldwide. Like many are knowing NSE, National Stock Exchange, than BSE. So that's the reason. Like mostly people are looking at NSE than BSE. That's the reason we are also like ignoring BSE here. We are focusing on NSE, which is the oldest stock exchange, that is NSE, sorry, BSE. So coming to the important part, index. So as I told you, index is indicative of changes in the market. It reflects the overall market investing sentiment and price movements. So according to the stocks and its movement, index will be reflected and it will indicate what's commonly happening. Like on majority, what is happening? Either bulls are high or bears are high. Okay. So index here, we have plenty of index actually. I'll tell you where to find it out. Again, go to market data, come to indices. Okay, click on indices. You will find something here. Scroll down, sectoral indices. You can verify this. This will be learning as well. So these are the indices available for us to trade with. Okay, so especially if you want to go with a separate sector, that is bank nifty, everyone knows bank nifty and nifty, but apart from that we have other indices also. Nifty financial services, FMCG, IT, media, metal, pharma, PSU, bank, private banks, realty, everything available. So whichever stock, whichever sector you wanted to prefer for the day also, you can prefer particularly. So for an example, I'm choosing pharma. Okay, Nifty pharma. Click on Nifty pharma. You will find out the stocks whichever is available under that sector. If you get a news today in Economic Times, I got a news that pharma sector is getting this kind of update, like positively it is going to blast today. Getting an information also fine, but we should not rely on the news. But getting the information, I'm going to prefer the stock from it. I'm going to analyze it technically and then I'm going to take my decision accordingly. So this is also one of the way. Filtering according to the sector. Do you remember in money management class, you might have heard this. Diversification according to the sector. In 10 stocks, one stock, one sector. Because if one sector is falling, it should not affect majority of your portfolio. Maybe one stock out of your 10 stock, if it is falling means, okay, you can somehow balance it. But 5 stocks you have in the same sector and 5 stocks are falling because of the sector news, then 50% of your portfolio is damaged. Right? So this is also you have learned in the money management sector wise stock selection. So this is how you can filter the stock and you can come to know which stock, which sector it is coming under. Okay. And also like if you want to prefer that particular, let me remove it. You will be learning, don't worry. Okay. And also sector wise technicals also I can find. Nifty IT. According to my technicals, I can refer what happened to this Nifty IT. Not only Nifty, not only Bank Nifty, other sector indices also available. So Nifty is generally, it will indicate 50 stocks under it. Nifty 50. So 50 stocks under it. If you want to go even more deep, if you want to dive deep, then you can prefer that specific sector indices itself. I'm taking a stock like Cipla. So let me prefer checking Nifty Pharma. And let me come to know like whether this pharma sector is going to fall or going to give a reversal according to the technicals of it, according to the news also as you refer. Okay. So this is what indices. In case if market has given a fall, most of the stocks coming under that particular, see, most of the stocks you can see that might have given a fall. All blood red. You can see. So this is how our stocks reflect. That is what this two way we can tell. It's directly proportional. 50 stocks directly proportional to Nifty. And in that one or two maybe backbenchers who will not be obeying any rules. They might have went to a different direction and they might have given a beautiful momentum also. But always remember, trading along with market is always a safe way. If you are going, maybe one stock in today, one stock have given a beautiful green, I made money out of it. You might have today, but it is not going to be consistent. Okay, this is always risky to go opposite to our market. So if market is blood red, take sell entries. You will always make good money, easy money and quick money. That means if market is actually working in our favor, that is market is also blood red and my stock, I have sold the stock, so it is beautifully falling down, I made money. Market is grassy green, it is beautifully going up, and I made a buy entry in Apollo Hospital and it is supporting my stock. So it's like directly proportional. So anyways, one is going to help other. So like that, always follow the market. Please don't go opposite. Even if you find a stock which is perfectly sitting on technicals, like market matters. Okay, so without market we should not play any game like opposite to it. Okay, someday it is going to backfire. Okay, so the same way you can prefer that respective sector also, no problem. Okay, so picking a stock like according to the market is very important for every intraday trader. And if you are a delivery trader, I'm an investor, so I'm planning for an investment. Do you think that I need to check Nifty every day? No, because you are an investor, you are not a trader. That means I'm planning for an investment now, so I should not like check it every day like what is going to happen and all. For a long term investment, it is not required to check every day, but a short term trading or for an intraday or for BTST STBT, you have to check market anyways. Okay, or I will give you a simple trick. If you are looking for an intraday or if you are looking for BTST STBT, look for stocks which is lying under FNO. I gave you a list yesterday, right? Look for the stocks lying under FNO, because always futures and option stocks will give its momentum on every alternate day. On every alternate day, you will get somewhat 2 to 3% in a stock, in an FNO stock. But if you are preferring a stock which is not in FNO, that is non-FNO stocks, if you are preferring, once in a while it is going to give a breakout, or if you are taking as a year, then the growth will be good throughout the period. Growth will be good, somewhat giving a breakouts and breakouts every periodical time. Okay, so this is how we can select the stock for our trading and investment separately. Please remember this point. Looking for a long term, looking for 6 months holding, 3 months holding, prefer the stock which is not lying under FNO. Logic is every day Nifty related stocks, FNO stocks will keep going up and down. So which cannot fetch you that much returns. But if you are going with stock which is not under FNO, it will clearly give a good move. If it is falling also, recover, giving